All right, everybody. We're going to make a start. If everybody online could keep themselves on mute, please. Thank you very much. So today we have a really exciting session about AI and blockchain. And we got Thomas and Adam running this session. Thomas is the founder of Rain Barrel Labs. Their company focuses on helping vulnerable communities and improving the livelihood of those communities through social impact projects, particularly tying in technology in order to leveraging it to basically get more impact and assisting those communities. Which is why blockchain and AI is particularly a very interesting field of research for this company, for Thomas and Adam. So without further ado, I'm going to hand over to him to start the session. Thank you very much.
Thank you so much, Omar.
You can talk here, or you can.
Thank you so much, Omar, and good morning, everyone. Great to see you here. My name is Thomas, and I have to start by acknowledging the youngest people who are in the crowd. I have a long background working with UNICEF, so I really appreciate it. Today, I have with me also my friend and colleague, Adam Bumpers, who is the CEO of the Internet of Energy Network. He's co-presenting with me today. Adam, can we just hear your voice?
Hi, Thomas. Hello, everyone. Thanks for the lovely introduction. It's great to be here.
Excellent. So let's get started. We have today this session and really happy to see all of you. We are going to have 30 minutes presentation and then maybe 30 minutes discussion, less if it's not interesting enough for any of you. I have to start by saying blockchain is a lot of things, and today we're talking about its application for including vulnerable communities. We are not talking about crypto and crypto investments and so on. So this is by no means financial advice, what we're talking about today. Let that disclaimer be very clear. Okay. So we're gonna start with just covering what is blockchain. Then we're talking a little bit about why are we talking about blockchain. And then we're going to have a use case, particularly through the presentation of Adam, who's on the call, and what he's doing in and around the world. So let's set the stage. We are focusing on using blockchain for energy. There's clean energy technology in the world, as many of you probably already use and produce. But the reality is also that there's more than 660 million people who are still in the dark, who don't benefit from electricity in the world. It's a lot of people. Most of them are based in sub-Saharan Africa. But I think today you can focus on people in the world generally who are not accessing electricity. So why are we talking about clean energy? Why does it matter? Well, it matters because we need it to power ourselves to participate in education opportunities, to benefit from health services, and also to be included in the job market, but also because we have this in our world and it's part of our dignity to be able to participate on equal terms with everyone else. Without energy, inequality deepens. And we live in a world where most people acknowledge that fossil fuels are worsening the climate crisis. So energy, and in particular clean energy, is important for a great deal of the globe. Adam, do you want to add anything to that?
Yeah, thanks, Thomas. And it's really important because there's been lots of gains in energy access around the world over the last few years, but it's not geographically universal. So sub-Saharan Africa is experiencing still slow gains in electrification for people. And the SDG 7, Sustainable Development Goal 7, says universal access to electricity by 2030. That means we've got to electrify 100 million people a year, and right now it's about 35 million people. So we're not going to hit that target. And as Thomas said, what that means is people still rely on fossil fuels, but they're increasingly vulnerable to impacts of climate change as well, because they don't have access to electricity, which brings education, safety, security, and all the other kind of things that we really take for granted. So that's why it's critical.
So a really significant gap.
Yeah, that's right.
And so why is it that a lot of people are not accessing electricity? Well, firstly, we have in many places very opaque energy markets that are based on and delivering using unreliable data. Data is simply not very good, and the way that energy providers operate is not always very clear. Secondly, the power grids often don't reach vulnerable communities. They're simply just cut off. And then there's the fact that small, clean energy projects financially really struggle. It's not big business. And the result is communities are being left behind.
That's right. And just to help to sort of support what Thomas is saying there, the bottleneck for finance on this is more significant for smaller projects that often have higher impact, because it still costs a relatively large amount of money to get permissions done and to get those projects off the ground. And so this is why this blockchain trace is really important, is because we're actually trying to figure out blockchain is great at finance. How do we improve the ability for finance to flow to support it?
Thank you, Adam. Yes, so this is the reality that we are operating in, and why we are thinking that a combination of blockchain and AI is part of the solution. And so if we just talk about what is a blockchain, we won't go into a long, detailed analysis of it, but it's really an online digital ledger that allows us to have a transparent interaction with information. And because it is a decentralized ledger, it is spread out across multiple hosts, and therefore you cannot easily change it and tamper with it. So it is a technology that can be used to verify, for example, where, when, and how is clean energy generated. So that we're not just saying, yes, we are delivering clean energy, we're actually able to verify that we are. And this is important in a system that has to rely on trust. It's a tool that can be used for decentralized inclusion. What it means is we can essentially use the blockchain to build a peer-to-peer community that is not dependent on some of the opaque, questionable energy practices that are excluding people in the first place. And blockchain and similar technologies, they don't have to be energy intensive. There's lots of blockchains that are energy efficient and not contributing with a huge carbon footprint. So that's important also because many people may be aware that, for example, a blockchain that also looks at financial value, Bitcoin is sucking up a lot of energy. So we're not talking about just using blockchain without thinking about what we're using it for. We want to contribute to a win-win solution. So blockchain from our perspective is really about having a technology that's transparent, allows people to transact peer-to-peer, and that it is transactions that are verifiable and open for everyone to see and understand. Do you want to add anything there, Adam?
No, that's perfect, Thomas. Absolutely right. Oh, we can talk about in the questions and answers. We can definitely talk about this, the greenness of blockchain, if there's any questions on that.
Okay, excellent, good. So this is our vision, and Adam will talk more to that a little bit later. But imagine we use this technology where you take $100 and you invest it in a solar energy project somewhere around the globe in a community that needs to be included in the grid but doesn't access the funds. Right now, blockchain can also be used to transfer funds peer-to-peer. This is why we're talking about digital wallets, cryptos, etc., etc. But behind this is that we're able to transact with each other directly. So with that, communities are able to install solar panels and microgrids that allows them to start producing energy. And of course, there's ours, the homes that are being kept in the dark. And in return for your investment, this is one way of doing it. This is one way that Adam is looking into do it, is that you receive energy credits that can be verified. Right? This can be a whole different discussion, but the bottom line is we have a system where we enable inclusion to electricity. It's affordable and we can verify it and we can get something out of it as people, as investors as well. It's a win-win for communities because of the clean energy perspective. It's a win-win for the planet. And then it's a win-win for us as investors if what we believe in terms of a return on investment is really to be powering others and maybe participate in a financial transaction. So how does it work? Clean energy is produced, and that clean energy is issued on a blockchain, and that blockchain then verifies and guarantees the origin of this clean energy, the time and the place where it's produced. And because of the blockchain, it ensures that we are not double counting kilowatts and renewable energy credits. Everything is verifiable, nothing can be changed. Based on that, we then transfer this into, or we transfer this, we create tokens. These tokens are the ones that enable the investment and also the ownership in the network. And this allows us to have multiple people transparently investing at scale. And it also enables us to link that investment directly to the local electricity generation. You want to say something more about that, Adam?
I think that's, we can dive into this into the questions, but basically the challenge with access to clean energy is often is a financial one and a regulatory one. And so what's happening right now around the world is that there is a push for this thing called guarantee of origin, which says, okay, where did this clean electricity come from? Because of the goal to push for 100% renewable and to reduce our impact on the climate. But this guarantee of origin is it's like people still are sending PDFs and Excel files. Like it's a pretty old school way of doing it. And it can be manipulated. And so the blockchain here is useful because it can help provide transparency in where dollars are flowing and transparency of what the outcome of those dollars are and what the impact then is on the grid or on that community who's being serviced by that energy asset. So it's a really good use case, and it's really interesting. We can talk about this in the questions and answers, like why is it taken so long and why is it still taking so long? Because this is a really this thing we thought we'd solve probably 10 years ago, and it's still, there's still so many barriers to it. So I think it's it's a really interesting part for us to look at. And what's cool about this part is blockchain is fundamentally good for for certain types of financial transactions and for transactions that exist between many different actors and multiple different times and different time frames and different places. That's where it works really well. So that's why I think this still has a lot of legs as a value proposition. So, but we can talk about that in the questions.
Yeah, thank you so much, Adam. And I think Adam just shared something that is really key to this. This technology has existed for a long, long time. And we live in a world where we are transacting and talking about carbon credits and buying carbon credits and offsetting, etc. But the underlying technology that we are using to validate that all of this is real is outdated compared to what we have today. And more importantly, it can be easily manipulated. And I think key to using the blockchain is to re-establish trust in systems and re-establish trust in participation.
That's exactly right. And to add to what Thomas said there, whenever you put something into a commodity, whenever anything becomes a commodity, and think about carbon credits as a commodity, unless the foundational information underneath it is true and verified and correct, that commodity is worthless. And what tends to happen is people get very frothy about buying a commodity around something like carbon credits when you need them for compliance. And it gets very challenging because companies will buy all these carbon credits, then find out subsequently that those are not worth as much as they thought they were because the underlying data was bad. And this is where, when we're on this movement for clean energy, we have to understand the data underneath it if we create these commodities out of it. And they exist, the commodities are real. They already exist all over the world, renewable energy certificates. And so what we're trying to do here is help make that more transparent so that those commodities have more validity and ultimately more price pull in the market.
And so ultimately, not only understanding the data better, but just ensuring also that it's real and that we are basing on our standing on data that can be verified. So why are we suddenly talking about tokens? We're talking about the blockchain system, and then we're talking about tokens. So if you are following what's going on in the world of crypto and blockchain, etc., you may have heard that real world assets, it could be my jacket here that we turn into a token that you can purchase online that gives you 100% ownership of this jacket. I'm not selling it today because it's a birthday present from my daughter, but still, the point is that we can tokenize data, and this is currently being used around the world. And then we're talking about using those tokens in a decentralized network that is really linked to transactions. I think Adam can talk a little bit more about how that's being used in the use case we'll get to. But the bottom line is it allows us to take the energy produced, tokenize it, and then pick that so that we have a stable unit of understanding the energy that's being produced. So for example, if I produce 1,000 kilowatts, I don't have that sitting in the bank in dollars in an energy market that can fluctuate up and down. I have it sitting as tokens that allows me to access 1,000 kilowatts. So that's one of the advantages of using tokens in this system. It shields against what we could call monetary inflation or fluctuation. But it also allows you, if you have a digital wallet, to have your tokens in your own custody. So it really increases the community governed value and ownership of the initiative, of the network that's being created. Do you want to add anything to that, Adam?
No, I think that's a really good discussion. Tokens have a lot of challenges because people think immediately when you think of a token, you think of speculation in the crypto markets and meme coins and all that kind of stuff. And actually, when we're talking about utility tokens here, we're talking about a token that drives the network. And so decentralized physical infrastructure networks, deep in networks and connected to real world assets. A real world asset can be, as Thomas said, his jacket, or it could be a solar system on top of a factory, or it could be a battery. When you link those two things together and you place a token in it as an incentive mechanism to then get more people on board, that's what it's used for, to try and help more people get on board. And so the token helps drive adoption of the network. And that's what Helium and a whole bunch of other projects have done really quite nicely. And the token is a unit of value to drive adoption of the network. And as Thomas said, when we're talking, and this is kind of like down the line a little bit, when we're talking about tokens that are insulated from price volatility, we're not talking about those tokens that sit on the crypto markets at the moment, of which Ion has one. We're talking about sub tokens that sit from that then are isolated and help a community transact around a certain issue. And that certain issue could be energy, or it could be other ways that a community wants to transact. And what happens then is it's called asset-backed financialization. So you're providing tokens based on the actual physical assets that exist there. And what that does is it's like stable coins. It pegs it to a certain number that doesn't change, or doesn't change in a volatile way. And so I think that's where it starts to get really useful. And that's where we start to see the opportunity for something like Ion to support the growth of community energy and transactions, insulated from currency volatility, but also helping provide more investment into the system.
And maybe just to add to that, we're talking today about using blockchain for inclusion of vulnerable communities. Vulnerable communities that do not necessarily have a lot of financial assets and purchase power in the first place. So you can imagine how important it is to produce a commodity that has a stable value, that you're not spending a lot of time on something that tomorrow is worth 10% and you don't have the money to pay the electricity you use. So you have instead a token that entitles you to the electricity you produce. Now, we are at the Ideas Lab and the AI Hub. So we are going to just briefly touch upon the fact that artificial intelligence can and will be used in this space. AI can help us with having transparency in the data that's generated and translate that into plain language that every user in the network can be a part of. It can also help predict the demand and financing needs. For example, let's imagine that in this village over here, there is a lot of solar power being generated, but over here, there's no investment. So it can help us say we need to channel some of the funding over here, some of the investment over here. We can use AI chatbots to guide energy use, right? So this has application at global scale, not only at local scale in vulnerable communities. And we can use AI in a system that has to be really relying on trust and community and solidarity to detect anomalies. I really struggled with that word in my preparation, but you can see it on the screen. And bad actors. So we don't suddenly have people entering energy producing grid that are not delivering clean energy, for example. So we can use AI in many ways, but we have to be mindful that AI as a technology is also power hungry and water hungry. So we need to look at how do we do this with minimal impact to the environment, minimal impact to the people and communities we're working with. I'm sure you are aware, but there's a lot of ethical dilemmas with use of AI. And I'm very happy here at this facility that we've got a lot of people really putting in a lot of time and trying to come up with less energy intensive ways of using and managing AI applications. So, is all of this real? This is a slide that is about the fact that when Adam and I have been working and researching in this space for many, many years now, we see a lot of talk, we see a lot of things happening, but we are struggling with seeing the real application, and makes us wonder sometimes, is this real or is it all talk and hype and crypto speculation? We don't think it is. This is why we are looking at how can we use this technology differently. You may or may not know that blockchains are already being used in the financial space for financial transactions. They're being used for logistics management. One small example is one blockchain being used to verify the origin of cocoa beans that are being imported to the European Union, so that you can track it all the way, because it is now a European Union policy that if you cannot verify where the bean is coming from, you can't import it. So that's some of the use cases that are growing. Again, back to what we're doing, we're really looking at it as an win-win technology, and we don't have all the answers, and we don't have all the use cases that says this is working, but we are looking at applying it from an ethical perspective. And if we find out that this is not working, we will abandon it. But for now, there's a lot of headwind that makes us believe that it's worth pursuing even more. Yeah, go ahead, Adam.
Yeah, I was just going to say, I was just going to say that it feels like this stuff was discussed a long time ago, and so why are we still talking about it is because I think there's fundamental benefit to how this is happening, and it's good that we're not in the hype of blockchain. Definitely there's a hype around AI, but definitely we're not in the hype of blockchain anymore, which is really good because it means we can just get on quietly in the background. And it's amazing how much work is still happening on the blockchain with major corporates around the world, as well as startups doing a bunch of different things. So it's definitely not it's not dead. It's actually moving more into the hidden kind of infrastructure of the way that businesses, especially businesses trying to work on financial transactions, are working.
And I think before we let Adam talk a little bit more about his work in Myanmar, just to say that it's my observation, at least, that we live in a society where there's an increasing distrust in institutions, in businesses, in what's going on the internet, etc., etc. And this technology, I can foresee, is going to be used more and more among people who want to reestablish trust, who want to reestablish transparency. So I see this as actually something that will continue growing and going to be the backbone of a lot of what we do online. Okay, Adam, tell us, please, a little bit more about your work in Myanmar.
Yeah, sure. Thanks, Thomas. So I'll just give a quick overview of Internet of Energy Network and what we've been doing. We started this business in 2021 to address the kind of barriers that existed in community energy and using the blockchain to drive that. And we can talk about it a bit later if we want in questions. You can see on our website the kind of stages we're going through to get to the point which Thomas talked about earlier, which is that full peer-to-peer transactional economy on energy. But the interesting thing about peer-to-peer transactive energy is that we thought this would just emerge kind of organically in 2018, 2019, 2020. But the truth of it is it's very, very hard to do. And most regulations will not allow it. So what's really interesting about that is that we found our markets to be overseas. And the initial use cases we've got for the Internet of Energy Network is in Myanmar with some factories that are there who have got solar or putting new solar onto their factories and generating clean energy for their own work. Now, they're not connected to communities yet, but what's interesting that Thomas said around that is that where there are countries with institutions which are not necessarily supporting regulations for clean energy rollout and for engagement across the country, there are lots of barriers for getting those technologies put in place. And actually then what we can do is use the blockchain as what we're using it for, is to support those companies who are putting in clean energy to get an increased financial return for themselves, and then increase the amount of that clean energy going in across the economy. Now, this isn't at the scale that's going to tip climate change in terms of stopping climate change, but it is part of the access to clean energy, and it is part of the rollout of renewable energy across the world. And so what we do is essentially, pretty simply, is we imagine a factory that makes beverages. There's a solar panel system on top of that factory. What we have done is we tokenize the data from that. So we take the data that says this much energy has been produced at this point in time and timestamp it and stamp exactly what that energy was. And then we get a photograph from a satellite image from space. We get a what 3 words definition of where that place is. So we get a guarantee of location. And then we get some third-party audit photographs from the ground that showcase that this is real, this solar exists on this factory and is true. And then we place that and tokenize it and place it all on the blockchain. And so by placing it on the blockchain, we can see that there is immutable data that sits there. Am I able to share my screen, guys, from here? Is that possible?
Yeah.
Okay, cool. I will, I'm just going to share this. So this is, you should be able to see Chrome screen with like an orange blocks at the top. Is that right?
We'll just hold on. We're just gonna set it up.
Okay. Because I can show you what this kind of looks like on the blockchain.
So the participant that is online, we can see it. We are just organizing the
Most
TV.
people can see it. Okay, cool.
Just give us one minute.
If it's too tricky, don't worry. It's not a...
No, almost there.
Yep.
Can you see it yet, Thomas?
People can see this.
Yes.
Yeah, cool. So this is dummy data. This is not real data. I want to make that very clear. This is not real data, but this is what it's doing in the background. We've just released a brand new version of this. So this is our previous version. But basically, what it says is we said, hey, we've got all this activity that's associated with an asset, which in this case would be solar panels on top of a beverage factory roof, and then all these different wallets of different people accessing and working on the tokenization of the data. And then we go to things like proof of reserves, and you can say, hey, as a solar energy farm, here's all the metadata that says this is what it actually is. This is dummy data, of course, so it's not real, and then you show a file, okay, great, there's a photograph locally, okay, here's another one. This is obviously the major solar plant in Morocco, not the other one. And then you can get all the data in there that shows what was created during that time. And all this is stored on the blockchain. And what that means is you can go through and have different authorities doing things on this piece of data, on these pieces of data, that enables them to see what the data is, to verify it, to redeem the credits. So this is made up 140,000 renewable energy certificates. Okay, we've taken them out. People have taken them away and retired them. You can't double count it because it's all stored in the blockchain. You can have auditors come in and certify that this is true and have a full audit trail of what's happened. And so the important part about this is that this is the underpinning behind the scenes blockchain of the connection of a solar panel, a real world asset, to a factory. And what this means is we are able to track and trace this. That's useful for us to sell the renewable energy certificates, but it's also very useful for an auditor to come in. And so when the EU or an Australian or an other kind of corporate who is buying these kind of credits, buying these renewable energy certificates, they can dive into it and have an audit trail that says, yes, this is valid, this is verifiable. And this is where the blockchain is super, super interesting. So the point about that is, I'll just stop sharing. The point about that is that Iron as an organization is setting the scene underneath for the enablement of these assets to come on chain. And then by doing that, we're able to help people see the real benefits that come from investment in these new clean energy assets. And so, as Thomas said, it's about building trust. And so what we do is we act as a bridge between the assets on the ground in these emerging areas and standards like the iTrack Foundation, which tracks renewable energy and other assets around the world into certificates. And so we bridge those global standards into the local asset, and then we help other organizations purchase those renewable energy certificates. And this is the first kind of stage on enabling a broader engagement with the token and with the network through these IoT devices, through these devices that measure this energy, and ultimately can provide a bridge from finance around the world into places like sub-Saharan Africa with microgrids that can then register and record the data that's happening. And so the reason this is important, and the reason why we're still doing this and why it's hard, is that the speed of change is not keeping up with the requirements that people need for electricity access, as Thomas said. And if we can connect finance better and connect a more streamlined system that gives trust on both sides, people receiving the finance to create these new energy systems and those providing the finance to create those energy systems, will have a much better outcome in the end. And so that's what we're excited about. And Myanmar is the first cab off the rank for us. Just so happens we've got partners working on projects there that we're able to work with. And yeah, like, we're excited about where it's going, because we think this is about creating the fundamentals of a new system that helps organizations do better with a different way of providing that finance.
Yes, I think that is the key. This is the one of many steps towards having a system that allows people like us to invest directly in vulnerable communities, help them get online with clean energy. And with that, we have covered the work that we are looking into, that we are doing at the moment. Some of this may or may not be useful for your thinking about your own business and how this could be applied, but we think that the principles of establishing trust and having transparency in networks where they can engage directly with each other is going to be part of good business going forward. So with that said, we've come to the end of our presentation, and we are now opening up. Perhaps there are questions, perhaps there are thoughts, perhaps there are visions.
There's some questions online. We'll just start with that because that was the first question that came up.
Okay.
So this was when you, this is coming from Paul, and it was about, it's a question that he asked during the time you were sharing the energy tokenization. Could you please clarify how user-friendly this system is for parents to use at home? Alternatively, is it typical managed by your business on their behalf?
Yeah, that's a good question. Thomas, you happy for me to answer?
Absolutely, Adam.
Yeah, so this is typically not at the moment a very user-friendly, approach for parents to invest in these things at the moment. So what most of the work we're doing is business to business. That's just because at the moment firstly, we tried that a while back and there wasn't a demand for it in households in Australia particularly. But I think there's more complication to this in terms of what we're trying to do here is build the market on both sides. So building the market of those with the energy production assets in developing countries and those who are buying the credits on the other side of it and providing the link between the two. But I'm happy to share our website, which talks about the future of this. And I think our phase 3 in our development would be much more open to people participating, like Thomas said, in terms of investing money into developing world countries in their projects, which is transparently shown through the chain and through the system. And so that then could become much more of a participatory approach for people at home to do that. So, but really we've seen right now the appetite and scale of people to do it themselves, especially like peer-to-peer trading themselves, is very, very low. And so we pivoted as a business to focus on what can we do at scale with business to business approaches. It's a great question, though.
Can I just add and say, I think it's an excellent point by Paul. And at this point, it's a question of establishing a system and making sure that it works. But ultimately,
yes,
something that is peer-to-peer needs to be so simple that parents should be enabled to do this with their kids at home. So yes, excellent point, Paul.
Yeah, and it's really good to keep that in mind. And you're right, Thomas, like that's the thing. A lot of this so far has been so highly complicated. And so, even the blockchain stuff, like especially sort of maybe 2 or 3 years ago, was just so overcomplicated. Everything was so overcomplicated that even the blockchain companies were rewriting how they were doing things. It was just too much. So I think it's a really good North Star to have in mind that this has to be very simple in the end, but the system underneath has to be very robust. And that's why I showed you an old version today. We've gone through 3 or 4 iterations of this in the last year and a half.
Yeah, I guess a couple of questions came up when you raised that point about the tokens, which seems quite logical, Thomas. I'm just wondering, have you had any, or are you likely to attract regulatory influences from government or semi-government organisations about the transmission of value, in currencies, or, are there certain complications about overall structure of, I guess, people getting benefits, paying tax, government solar, I guess there's a myriad number of sort of external influences perhaps on the system that you're coming up, and I'm wondering whether that's for further down the track analysis.
I think that's an excellent question, and I'll let Adam speak to the engagement with regulatory authorities on this in ION. Adam?
Yeah, sure. It's a really good question. So obviously crypto in large has not been well regulated. I mean, well regulated is in decent regulation that helps crypto companies move forward. That is changing. And so there is, there's pretty good regulation around tax in Australia on this, and there's pretty good regulation in some of those countries, mostly developed countries around the world. I think the most important thing for I mean, crypto at large, but sort of blockchain as a technology, is that they are connected, but they're not the same thing. And so it all depends. It depends when you place a token into a system of why is that token being placed in the system in the first place, and is it actually doing something that drives value in the network? And for us, it has to drive value in the network. It's a utility token. It is part and parcel of it, which is something we've had for a very long time in other industries, you know, like air miles and airline points and points on credit cards and Disney dollars at Disneyland. They're all the same thing. They're basically taking money that's fiat, that's our normal currency, and turning it into another form of currency that you can use to buy things. And so what I hope to see here is that regulators look at this in a similar kind of way and say, okay, well, here's the reasonable tax incentives that sit with our tax parameters that sit with it. But the challenge in developing countries, and especially developing countries where energy is slower in developing and slower in being rolled out, is that there just aren't the institutional incentives and strength of governance to support decent rollout of electricity. So I'm really not talking about Australia here as an example. We have very strong governance, very strong incentives, very strong ability to roll out solar and do things without the blockchain. You don't really need it here. Maybe we need it here for some proper peer-to-peer trading in the future. That's okay. But I think in developing countries, still there is this need for trust and transparency that may have to come from industry rather than government. And it's not because governments are not trying to be trustworthy in the rollout of electricity. It's just that they've got a lot on their plates, and a lot of this is just difficult to get going. And so even countries in Southeast Asia, relatively advanced economies, have very stifled regulation on clean energy. And that's just because electricity has been such an old industry. It's the grid is essentially 150 years old in terms of the way it works. And so this new movement of the grid, electrons flowing both ways, as in not just from centralized power plants, but from solar back into the grid, that is a fundamentally difficult thing to deal with. And so what I think from the regulatory point of view is when crypto comes in, saying it's actually not about it being a crypto token, it's actually about saying, does this incentivize or does this support the evolution of regulation on electricity markets in those places? And that's how we look at it. But to be honest, the most important thing is for us is to provide a simple system with finance that sits behind it that doesn't have to interact significantly with an outdated regulatory system. Because as soon as you get stuck into that electricity markets, everything just gets tied up in red tape, and it takes a long time to get through. So I think, yeah, to answer your question, there will be more regulation. Right now, it's not so much, but I think this might help. I think what we'll see is as we go through, as long as the regulation is working in hand with what the actual outcomes we want to see, then we should be a good outcome. Does that answer the question?
I think it does, and I'd like to add, when regulation and regulatory requirements come, the good thing is that everything that is underpinning this is fully transparent and accessible and verifiable. But I think that as a world, we are not yet at the stage where we fully understand the intersection between finance and business in the same transaction, if that makes sense.
That's right. And energy is old. There's a lot of reasons why energy is very conservative in terms of what the evolution and innovation is, because it's dangerous. Right? Electricity is dangerous. It's got to be managed very well.
And I think a second part of this, just to be keeping in mind, is it's not about disrupting the existing electricity production. It's a question of going beyond that and providing a solution to communities that are not and will never be included in those grids if we don't have a different solution.
Exactly. Yeah. And there's sorry, Tom.
No, it's just time-wise. I know there was one more question over here. And then back to you, John, but Omar, do you want to share the mic? It's already, go ahead.
So I'm not sure if this is a question or a thought, but I've been involved in AMO returns in the past and REC applications, and it's a pain. And as you say, the verification, love the solution you've got for tokenization and verification of RECs. I suppose my thought is the next step to this, to actually push it out into the vulnerable communities, is finding a way of attaching value to the electricity. So obviously in the Myanmar trial, it's great because the factory is benefiting from the electricity it's generating, and then on top of that is getting the RECs, which are now more easily transferable, more easily verifiable. But at the first point, they've invested to generate electricity for free. If we're talking about vulnerable communities, I'm wondering, have you thought far enough to have a solution for how the electricity generated has a value beyond that of a REC or a carbon credit? Because obviously here it's however many cents per kilowatt hour, and that is where a lot of the economics in these decisions to invest come from.
Yeah. So could you just, if it has a value beyond what?
So I think the REC, the sort of tokenization of carbon credits or RECs is really clear there. I suppose to actually support that next step into getting investment into vulnerable communities, those vulnerable communities can't pay for the electricity or the investment necessarily now.
Yes.
So is there a next step to this where you're looking at tokenizing the actual kilowatt hours beyond the REC so that there's a return there? And I suppose how the economics to that work, because
I hear the question. Did you hear it well, Adam?
Yes, I did. It's a great question.
Do you want to address it?
Yeah, sure. Really, it's a really wonderful question. So the answer is yes, we've thought about it. Do we have a straight answer on it? Not yet. But I think the third stage in where the three stages we have of the development of the organization is do RECs right now. The next one is implement distributed hashtag technology, which is slightly different to blockchain. It's on holochain, but it's on through devices, so small IoT devices, or into the inverters themselves in these places. And that means we're getting direct feeds of data, which opens up the ability for them to be trading with each other. And that's the third stage. The third stage is a connected system of transactions in, for example, a community microgrid in sub-Saharan Africa. Then at that point, we're tokenizing the kilowatts that are transferring between different assets, between, say, a battery and a solar system, or a solar system and a consumption of that in a refrigerator. That doesn't have to be done at that very super granular level, but it has to be done at least at the meter level in the houses and at the batteries that may be personal or community batteries. So what your question was is, can we tie the value of essentially what you would pay for electricity to the ability to invest in those grids? And the answer is yes, but there's two important nuances. The first nuance is that microgrid connected to the macro grid, and are people already paying a price for electricity from the macro grid? And so what I mean by that is, are they already connected and they're paying money, but that grid is not running on clean energy, is running on fossil fuels, or that grid is insufficient and it has lots of brownouts? So we talked about 660 plus million people without access to electricity. There's also a vast amount of people who have access to really shitty electricity. And so that means electricity is fading in and out. And so that is also not sufficient for a decent development model. So, but if they're connected to the grid, there's money they have to pay for that electricity, and that then can be placed into the system. As in, if we're cheaper providing this other form of electricity and it's more resilient, we switch the ability for them to pay for that on the main grid to pay for this external, for this distributed energy resources, the solar and the batteries. And then Iron as an organization would take a small transaction fee of that's then paid in Iron to keep the network going. So that's one way that would happen. The other part is if it's not connected to the grid and it is a fully, it's a mini grid that's just stands as isolated by itself, then what that needs to be in there does need to be seed capital, but the seed capital could come from individual investors or institutional investors that is then placed through the system. And so what's great about that is they can see the transparency of the money that's going in. And so this tries to reduce friction on the ability to get those projects up and running. And then there would be an agreement around the payment of that electricity between different actors in the system. And there will be a payback time on that period for those solar assets and battery assets, which will be any normal payback on an investment in that kind of size, but these are quite small investments. These are not major, they're not megawatts of power, they're kilowatts of power for the most part. And so there would be an investment associated with that, which would then be tied into transaction model that sits between people trading electricity. My battery is full, you want some electricity, cool, I decharge my battery, you get the electricity, you pay me in credits. A percentage of those credits goes back to the investors and to the system that's running it. And that's how we run that part there. That takes time to get going. I think, as Thomas said, the most important bit, and we were going to that straight away 4 or 5 years ago. No one was ready for it. And so we put it back to very, very basics. It's like, get the data assured at the very beginning, make sure it's true and trusted and transparent, and then we can start to move into those trading mechanisms. But yeah, that's what we've thought about. I hope that goes some way to answering the question.
It looks like it. Do we have time for one more? Yes, please.
Hi, Thomas.
Hi.
Did have a question in 2 parts. First of all, do you see this mainly having much impact on the Australian? Like, is it, will there be on the Australian market, or will it be more international? But secondly, there was a lot of understandably talk about microgrids and small scale production. So a lot of with carbon credits, I think what's happening is some of the small time producers aren't getting the credits bought because people just want to go to one shop and buy one token, or from one large scale producer, which tends to take it away from the smaller social enterprise sort of people who are trying to do the same thing. So how do you avoid that? And how do we avoid the greenwashing, where your big polluters just come in and buy the tokens and then just keep polluting anyway?
Yeah, wonderful.
I just, Adam, before you get to it, I just wanted to share something that completely evaporated. So I'll let you start, Adam.
Sure.
Go ahead.
Oh, do you want to share something first, Thomas?
Oh, yes. I think what I wanted to say is, I believe that in Australia, there are other big players in this space. And as Adam said, the business we are focusing on in this presentation is really overseas. But I do think that there are going to be emerging solutions to the key points of your question is, how do you aggregate this so that it can actually be a sustainable business that multiple people benefit from? And how do you ensure then that that's accessible on a market? And how do you make sure that's not being used for greenwashing? I will let Adam talk to the specifics of those. Go ahead, Adam.
Thank you. It's a really good question about Australia. I don't think this, at this present moment, is the Australian market's the right place for it, to be honest. I think we've got enough good regulation here. We've got, the retailers are doing virtual power plants, which is essentially the kind of trading between them. And the research, very clearly, we're involved in the connected company to this beforehand in RedGrid. We're involved in some of the work coming out of UNSW on social license to automate, which was funded by the International Energy Agency. And the long and short of it is, people aren't really ready for full automation of their houses on electricity, and they want to have overview and control over it. So I think it's not really for here yet. Having said that, that might change, and I hope it changes to have I would love to see in Australia a distributed microgrid system where every neighborhood is basically its own microgrid that can island from others. And AusNet and others down here in Victoria are actually looking at that, and they're trying to work through it. It's still too expensive to do everywhere, but there are some good examples of it, Yakandanda, and a few out west in Victoria, where they're basically essentially able to island themselves away from the main grid, which is important because we're going to face a large amount of climate impact. So my other work is I head the climate services, the consultancy here, and we're doing a lot of climate impact work, and that's going to be important. On the other part, which was, sorry, give me a quick update on the second part of the question.
About how do we ensure that this is going to be available on the market and not used for greenwashing?
Yeah, great, really good. So, and small scale producers, yes, excellent. Yeah. So the challenge we have, my background 20 years ago was on carbon offsets. I wrote my PhD on carbon offsets, and the challenge I was looking at there is, how do we incentivize small scale carbon offset projects that have real community benefits? And the challenge is, most of the money from large corporates will go to large scale projects because they want to buy large amounts of carbon credits for lower transaction costs. And necessarily these smaller projects have higher transaction costs, as in your small project needs to still be audited and verified and placed into the system, and that costs money. So there's some changes around that are making that easier, and technology is one of them. And so, Thomas alluded to this aggregation of credits. And so what we are focused on here at ION is let's get the data from the ground really, really well done, really well put together, and a simplified way of making that data accessible, i.e. putting it on chain rather than waiting for emails and attachments and PDFs and Excel sheets, placing it on chain from the source, from the actual source. And then that data becomes the truth point for enabling the aggregation of credits out of that, or renewable energy certificates out of that. Because what it means is you could look into the ION system and you could see 100 projects on there, and you can click through and see each of the projects that are underneath it in an audit trail. And so if a buyer comes along and says, I want to buy renewable energy certificates that we know are verified, certified, and actually we've got a clear audit trail for all of those, they could aggregate and buy the whole lot in one go. So what that means is smaller scale producers could place it into our system at limited cost and enable them to be then have a purchase, a sale price opportunity that sits there at a higher level rather than a lower level going out to try and do it by themselves. And so that's how we see the value of the system emerging to support aggregation of those credits. Because if you're thinking about commodities and commodity markets, a primary or bilateral commodity where someone says, I want to buy your carbon credits from your project, that only works for large scale projects. You have to get to the secondary market, which is that you've commodified the commodity's got to be commensurable enough with others in a secondary market that anyone can buy them, like a financial derivatives. But what we need is you need the financial derivatives data underneath it to be truthful and transparent and have integrity. Otherwise, you end up with like a subprime issue in the US. And so I think what we've focused on is integrity, transparency, and scalability. You can see on our website, if we can get that right, then hopefully we can open this up to small scale producers worldwide. Does that answer the question?
I think so, at least for now. Yeah.
Okay, cool.
Thank you so much. Yeah. I think that probably takes all the time. It's 11:05. I don't know where we are, Omar.
Yeah, no. Any other questions? Final questions? No? Okay, no, we'll finish the session. Cool. Well, thank you for joining us and sharing your knowledge and expertise. Thanks, Adam, online, if you can hear me.
Yes, thank you, Adam.
Hope you enjoyed. And thanks for everybody online. This marks the end of the session, guys, online. People that are here, obviously, feel free to network and spend the rest of the time, if you have time, to just talk to each other. If you want to find out more about the Connectivity Cafe Plus events, we have them every month, and we basically bring a speaker to talk about an interesting topic, obviously related to innovation and startups. So if you want to find out more about that, it's in the Impact 10x website, just impact10x.com.au, and you can find out more about the upcoming events. On another matter, with the Venture Builder, the Impact 10x Venture Builder, one of the programs that we run here, basically we've launched it and we have selected the startups that will be invited to participate in the Venture Builder program. We'll announce them very shortly as well. So stay tuned for that. And that basically marks the end of the session. Thank you so much for coming, and we hope to see you again next time.
Thank you.
Thanks, everybody. Appreciate being here. Thanks, Thomas. Thanks, Omar.